I'm not sure, for those of you who are considering buying a house, if the cost involved in buying that first home feel daunting. My guess is that many of you are afraid of what it might cost to get into your first home, especially when it comes to the down payment. Well, believe it or not, putting 20% down isn't always the norm. There are lots and lots of solutions and lots of programs and options out there for you. We received a listener question from Jimmy in Norcross saying he wants to buy his first home, but with the price of homes and current rates, we aren't sure if we have what is needed for a down payment. What are our options? And the reality is, if you're planning to move, planning to buy your first home, or saving for all the cost involved, especially when it comes to the down payment, you don't necessarily need to be worried about that. Unless specified by your loan type or your lender, it's typically not required to put 20% down, which means you could be closer to your home buying dreams than you realize. The mortgage report says, although putting 20% down to avoid mortgage insurance is wise if affordable, it's a myth that this is always necessary. In fact, most people opt for a much lower down payment. When I bought my first home in 1992, I put 10% down because I couldn't afford to put 20% down at the time. I paid a little private mortgage insurance. I wound up selling that home 2 or 3 years later when I moved from Columbia, South Carolina to Chicago. And so the few years that I paid private mortgage insurance really wasn't that big of a deal. According to the National Association of Realtors, the median down payment hasn't been over 20%. Listen to this, since 2005. In fact, for home buyers today, the average down payment is 15%, and for first-time home buyers, it's just 8%. So you might not need to save as much as you originally thought. Now, there's also plenty of resources out there that can help you toward your down payment goal. According to a down payment resource, there are over 2,000 homebuyer assistance programs in the U.S., and many of them are intended to help with down payments. Many of them are intended to help people who earn at or below the median or the median income for your municipality, for your geographic area. There are also loan options that can help too. For example, an FHA loan, the minimum down payment is 3.5%. Yep, you heard that right. So $400,000 home, you're going to have a down payment of less than $15,000 if you choose to do that. And VA loans, which are loans insured by the Veterans Administration, and USDA loans, which are loans insured by the U.S. Department of Agriculture, have no down payment requirements for qualified applicants. So if you qualify, you might be able to buy a home without putting anything down. With so many resources available to help you with your down payment, the best way to find out what you qualify for is by consulting with your loan officer or broker. And don't feel like all loan officers or loan brokers are created equally. In some cases, people are experts on down payment assistance programs, and in some cases, lenders don't know anything. For many people, waiting to save up 20% for a down payment may cost too much time. While you're saving for your down payment and paying rent, the future home of your price might go up. So you might save $5,000 a year in interest and spend $25,000 or $30,000 or $40,000 more for a house. Home prices are expected to keep appreciating. I saw some research that says for the last 42 years, home prices in the U.S. have appreciated 4.8% annually. So the bottom line is, keep in mind you don't always need 20% down payment to buy a home. If you're looking to make a move this year, reach out to your trusted real estate professional, and we'd love to be that for you and start a conversation about your home buying goals.